The unusual mammoth crash of real estate. Is it the beginning of World Recession 2.0?
A recession.
Global recession.
Recession. A housing bubble.
The decline in housing prices sent some investors into the valley of worries, while sending others into the wonderland of snapping their chance. Today in this video, we will talk about the reality of the upcoming bizarre crash of real estate in 2023. Currencies are crashing, and economies are bleeding. No matter where in the world you live, this video is a fact-based alarm, as this crash can affect every part of the world. Stick until the end of the video so you don't miss out on anything. There's a black and white to finance in periods of recession and giant market crashes.
We're down by between 3 and 4.5% generally across these markets.
For most people, they are the volcanic eruptions that flood out the lava of inflation. The housing market crash can once again bring in inflation like the Great Recession in 2008 and the Great Depression of 1929. Now, enough with the wild predictions and the sentimental conspiracies. Let's get ourselves back to the fact factory. The real question here is the odds of a real estate crash happening, and if it does, how big could it be? The crash-o-mania. Crashes are popular for horrifying reasons. And why not when you see such an abrupt landslide in net worth? Some see them as a gold rush, while others see their gold turning to absolute dust. Keeping in mind the volatility of the real estate market, crashes are not just as often as compared to frenzied digital assets like Bitcoin. The last notable crash that took the housing market by storm was back in 2008, which was no less than the extinction of dinosaur-level realtors. As opposed to other markets, housing price movements generally tend to be more complex, as there are various reasons why housing prices go up, down, sideways, or in circles. A historic correction. A lot of financial analysts gave out their opinions that the correction which is about to happen might be the biggest since World War II era. Now this may inject a dose of panic into the house owners of recent times, but there is no truth to the story, at least yet. There are rumors that we could see a giant fall in prices of the housing market, which may dip down to 20% below current levels. Again, the same question arises, but is it even possible? The expert talks. To identify the landslide, we need geologists. Let's see some of the biggest industry experts have to say about this. The experts at Morgan Stanley predicted a decline of more than 10% from June 2022 to 2024. This prediction was placed against the 45% increment, which was seen in the housing price during 30 months, starting from December 2019 to June 2022. Precisely, there has been an avalanche down in the US market, at least in some areas, if not all. The S&P Case-Shiller Index, which keeps an eagle eye on metro areas of the US, has pointed out the wavy and unusual nature of housing prices in recent times. For instance, prices were down 2.6% between June and September last year. The cities that saw a huge fall in pricings were San Francisco, with a loss of 10.4%, Seattle losing 9.6% of evaluation, and San Diego was 7.2%. Other cities like LA, Las Vegas, and Denver clipped in between 3 and 6% fall. Whew, that's a lot of numbers. As we just witnessed the how part, let's see some about the why. Case study of the city, San Francisco. For identifying the fall, it is best to study the illest fish in the pond, San Francisco. It is no secret that San Francisco has long had the most luxurious housing market in the country. As the saying goes, the higher you fly, the bigger you fall. The same has been the story for the city as well. There is no one culprit reason here. It is because of an array of reasons, which includes remote jobs, unaffordable housing prices, and high rates of interest. Since the dawn of the pandemic, about 7% of the population in San Francisco has left the city. This was noticed in a time frame starting from July 2020 to July 2021. The work from home has been a new add-up factor, which might be the catalyst to the reason for the recent exodus from San Francisco, alongside the soaring prices, of course. It all leaves us on the same doorstep questioning the same thing. What about the housing prices now? The other side of the crash for home buyers. A crash or a correction is never a bad thing for everyone, at least for the buyers. Although the clouds over the real estate market show a rainstorm of inflation, you never know if it's just a minor correction. Housing experts have the watchman's duty on the economy as it drifts into the darkness of recession, abrupt interest rates, and geopolitical confusion. There is a green light of relief for the home buyers as the mortgage rates show signs of ease, as they are less than half as compared to the past year. After huge leaps in pricing, housing prices seem to finally cool down and come down to earth, although a lot slower. This brought a time of uncertainty as the buyers are still waiting for the right time to buy their dream house, clouding their judgments. The YOY factor. How does it compare to last year? Compared to last December, the existing home sale price has been up by a minor 2% increase. It stands as solid proof of just how uncertain the market movements have been in recent times. This data has been given by NAR, or the National Association of Realtors. As the price increases on a record 130th month back-to-back when it comes to YOY pricing, there has been a downtrend in monthly comparison. If that jumbles up the current situation for you, hold up. Comparing the record high existing home sale price, which was around $410,000 in June 2022, there's been a decline in December last year, bringing it to around $360,000. This means that on a monthly basis, there has been a decline month after month for the 11th time, but on a yearly basis, there is somehow a little increment in the housing prices. The housing market in recent days has kept the home shoppers like hoppers with no grass to hop on, bringing them on the sidelines. Some buyers seem to be buying at the moment, with all credit to the decline in rates. Mortgage applications have also increased by 7%, indicating the readiness to buy a house. While this sign cannot be taken as a sure shot since there has been a drop in home sales, with the sales dipping over 1.5% below. Are houses more affordable now? Home Affordability Index. Tracing back to 2021, despite looming prices in the housing market, buying a house was pretty affordable back then. Reasons for good home affordability were healthy savings, low rates, and strong income. Despite the COVID era, the position to buy a house for an individual was seemingly good. However, just after a year, this index has fallen considerably. Although it's not the lone deciding factor, it still affects decision-making in all sorts of ways. It is no secret that buying a house for the majority is the single biggest financial decision anybody can make. Sales have also shown a bit of downtrend considering a track of house sales generated. For an in-depth overview of real estate trends, you could check out nar.realtor. Where does the reality of real estate lie? The majority of economists have stated that the housing market is on its way to correcting itself with a little downhill fall rather than falling off the cliff, the crash. Lawrence Yun, who is a chief economist at NAR, has put up his verdict, stating that after 2 years of price soaring, there will be no further change nationally.
So once we see the affordability improve, then we'll see more buyers be able to purchase homes. And the same thing as we see mortgages rates decline, those locked in existing homeowners will be more likely to refinance or be more willing to move.
But does that mean there are no sales prices or growth? Of course not. Actually, we could still expect a certain type of increment when it comes to house prices, especially in locations where house prices have remained affordable in the past few years. Executive Vice President of ATTOM, a leading real estate insight company, has also supported this opinion of improvement when it comes to pricing. However, he also stated that we can see a 5% drop nationally. Experts also pointed out how much safer the buyer is right now as compared to the last episode of the 2008 housing market crash, bringing down the probability of a crash to a relatively lower level. However, it cannot be out of the question as you never know when the pages turn back to 2008. Verdict on the housing market. A stampede has been caused for no known reason. Although the market is considered to be cool during this time, the possibility of a crash is relatively low. but it still cannot be put out of the question. As said earlier in the video, housing prices are not just decided by one sole factor.